For the next session that is going to start right now, I would like to invite Mr. Piyush Gupta onto the stage. He's from Polytrade, and he will talk about the potential of fractionalization and tokenization in Fintech, enabling real-world assets on the blockchain for institutional viability. Over to you, Piyush, and thank you so much for joining us today.
So I guess pretty hot topic, fractionalization, tokenization, and Realize is already talking about it, I guess, next session. So I would not take much time and dwell directly into the presentation. Okay, so let's quickly dive into it. Just for clarity, when I talk RWA, I mean real world assets. So people in the finance world call it weighted average or something, but for us, it's RWAs, real world assets. Quick introduction about myself. So I'm founder and CEO of Polytrade. We are basically a trade finance company moved into Web3 using blockchain technology to make the difference by tokenizing assets and bringing them on chain. And then I'll talk a little bit about fractionalization also going forward. I've spent around 17 years in financial world. That sounds quite a lot actually, reading on the stage. But yeah, that's me. I'm an aerospace engineer from IIT Bombay. And yeah, I'm definitely entrepreneur by choice. So moving on to couple of, basic questions. Everybody call themselves fintechs these days, right? Whether it's a web-based application, whether it's a blockchain application, people start calling themselves fintech. But what really is a fintech? As per me, any company which is trying to bring a change into the financial world using technology by easing the user's journey, by bringing better products, by reducing the time, anything like that, what technology does, ideally that's a fintech, right? Blockchain can add more variables to that, but let's dive into that going in the further slides. So just to give you some stats, we are talking about fintech and technology, but still larger institutions, banks are currently spending more than $25 billion globally on back office and middle office work. That means paper-based processes. That means transfer of assets happens through full manual, jobs, and very orthodox and old school way of working. Another number, and this is quite interesting actually, we'll deep dive into that. So we're talking about $30 billion plus spent on custody services. And what custody services means, a third party which provides trust-based services for two parties to transact. So if I am purchasing an asset from another person, I would have a custodian coming into play and making sure that my assets are safe, my assets are secure, and the other person is not trying to dupe me. I think this is something which we all know and get frustrated about it. So any international payments which are happening from one country to another today is a normal time frame of 3 to 5 days. And it's not only the SWIFT transfers, it is the questions and answers asked by the banks, which makes it even worse. So we're talking about a 5 days of settlement, which happens between, the international transfers. I think this needs to be a little bit more explained. When I talk about democratization, most of the assets remain undemocratized, means these assets are not available to larger audience. If I'm talking about assets in UAE, those assets necessarily are not available to people in India or US or Europe, and vice versa. There is no, again, this is a major problem between the financial world, where there is no communication infra between the lenders. So one bank will never know that what other bank is doing, whether the lending is happening on one person from one bank to another, to the party, another bank doesn't know about it. If this kind of infra does exist, what we are talking about a seamless, transparent structure where banks will not get into any scams or frauds. Parties will be fearful to do any such transactions because they know that banks can communicate with each other or the lenders can communicate with each other. non-composable assets. Again, this is pretty much in line with what democratization was. When we are talking about non-composability of assets, it's about having one asset which is available to on different platforms, on different audience, on different platforms, which is again not the case today. So most of the assets remain non-composable in today's world. One answer to all of this, and I think blockchain, we have been talking about blockchain for a good number of years, but finally last couple of years has seen a lot of changes where blockchain is actually solving problems now. Blockchain is reducing the transaction costs. Blockchain is doing the settlements within microseconds. Self-custody, which has emerged as a very big solution to the custody problems. When I talk about self-custody, we are talking about our own wallets, our own Gnosis safes and all. Then again, how do we ensure that there is a common infrastructure where banks or lenders or parties can talk to each other? That's where blockchain becomes a totally immutable ledger, so that people there is no change in the data between one party to another, and everybody follows the same pattern. Is more the architecture is more open in nature, and assets are composable, and these are the standards acceptable by all. So again, blockchain, last 2 years have shown a lot of promises where products are more acceptable by the institutions, and more solutions are coming every day. I think many people would not be even sure that what tokenization or fractionalization means, right? So let's little bit deep dive into that. More to talk about Polytrade, but tokenization is largely creating a digital asset, a digital version of a physical asset. Tokenization has been happening from quite like couple of years. Many products, especially real estate and treasury bills, are happening on that. We are now tokenizing real world assets on a public blockchain, ideally to make any real world asset available to people through the purchase of tokens. And just to let's take a look at an example here. So we are into trade finance space, and when we do trade finance, we know that there is a supplier and buyer where there is a physical trade happening. What tokenization plays a role here is that supplier basically tokenizes his invoice, which is being raised on the buyer, put it on a marketplace, and then the marketplace basically makes that token available to retail and institutional investors. Those investors comes and purchase this token, and then finally on the due date, the buyer settles the token holder. In this process, we are talking about the supplier getting the payment early, which is helping him to reduce his working capital cycle. Providing a tokenized asset to larger audience globally when they were not able to get an access to a underlying asset because of geographical restrictions, because of industry restrictions, because of their size many a times. However, a tokenized asset is made available to people globally. So yeah, we are doing a lot of work on this. And before I move to the next slide, I also want to give you a little bit about fractionalization also here. So when we convert any real world asset into a token, it also allows people to own a fraction of it. What that means is, today, if I'm looking at real estate as a classic example, if it's $1 million property, not necessarily that everybody would be wanting to put $100,000 or $500,000. What if I want to buy only $527 worth of that asset, right? Now that's an odd number. Is that even possible for somebody to fractionalize an asset in that specific ratio? Yes, with today's technology and blockchain, that is quite possible. So tokenization and fractionalization both becomes a key solution to this problem. Again, looking at I spoke about how retail can benefit from tokenization and fractionalization, but look at the large institutions today. Selling of assets from one institution to another need a lot of middle office and back office work, where the underlying documents needs to be transferred, where the legal paperwork come into play, where custodians come into play. However, through tokenization, a large institution can simply tokenize their assets, allow their investors to come and purchase the tokens of their choice as per their risk appetite, and simply come on the due date to claim their principal and interest. So, again, in particular, this example, we are working with institutions like JP Morgan, where we are digitizing, helping them to digitize their receivables, and helping them to securitize and sell it across the broad range of investors, including institutions and retail. So, more and more institutions will keep using this technology. I think the more democratization we are talking about, the more composability of assets we are talking about here. So, we all know where digital assets are going. Last couple of years, we have seen a major growth in into the blockchain technology as such. Still, the adoption is not that big. We are still talking about almost like even less than 100 million people today who own and use cryptocurrencies. Institutions are nowhere near to how they have been, holding the physical assets. So a lot of adoption is required here. And when I talk about the mass adoption, we have few instruments which are coming out from regulators and governments. So CBDCs, I think, is a very hot topic where most of the governments are releasing their CBDCs, which is again a programmable currency, which is reflecting the actual fiat. Then we are also looking at tokenized deposits of banks. So today, if I own $100,000 in bank, I could request my bank to issue $100,000 worth of tokenized ERC20 tokens, which I can use onto multiple platforms to generate yields, to purchase assets, to buy any fractionalized assets which are available on blockchain. And of course, to do all this, we definitely need independent custodians, because again, it cannot be totally trustless economy where people are not knowing exactly who would their settler be, who would ensure that if tomorrow the asset issuer is not there, how could somebody claim their rights or the principal or their interest. So we are still looking at independent custodians to come and play a major role here. Let me give you a little bit about what Polytrade does. So we have again, just to give you a quick background about us, we have spent almost 10 years in trade finance industry. We have funded over $500 million of invoices originating from Asia and Middle East, selling to large companies in US, Europe. We moved into Web3 with the idea to use blockchain as a technology to improve the efficiencies of trade finance, to remove the scams, frauds, which are very popular, which are very common in this space. So till date, we have funded more than $2.8 million worth of invoices. We basically, what we do is we purchase an invoice from a supplier, we tokenize it, and we make it available to people for purchasing either in full or either in fractions. So far, we have done more than 160 invoices. We have institutional as well as retail lenders on our platform. So we are currently offering around 10 to 12% yield to institutions who are putting in their money. Again, we just closed our seed round. We have raised $4 million from AlphaWave, which is Abu Dhabi's one of the largest hedge funds, Matrix Partners, Polygon Ventures. So we have a good pedigree of investors at Polytrade, and now with the institutional partnerships which we are cracking, we are 100% sure that this whole tokenization will go to a next level. Again, we knew that the securitization vehicles or the securitization business is a very large business when it comes to institutions. What that means is today, even when we look at large banks like JP Morgan, they are securitization. They are securitizing their existing receivables worth $8 billion every month and selling to large companies like BlackRock and such institutional investors at the back end. Again, this is a very manual process. This is very paper-oriented process. And what RWA or Real World Asset Marketplace literally does is tokenizing these assets, allowing investors to come seamlessly buy those assets in multiple assets in single checkout using crypto or fiat. And then on the due date, they just come and settle the asset. Now, we have done some innovation around in this space. We released our own ERC6960, which is a dual layer token, which allows to which allows the main ID to be connected to the mother asset, and the sub ID basically takes care of all the variables, which could allow us to fractionalize in the way we want. Yeah, this I have already spoken about. So till date, this was not possible in blockchain industry, and with our new 6960, it is pretty much possible to do this now. So this is just a slide which talks about what is happening around the globe, but institutions like Mastercard, institutions like Franklin Templeton, private equity funds, everybody is moving into blockchain space. Everybody is accepting digital currencies, and the more CBDCs and stable coins which come into play, this will become a major thing for the future. So I would rest my case here, and would like to ask if audience have any questions around it. Happy to answer.
But that's true what he did. So I guess a lot of docs ask the question. So I guess in your case, if you're tokenizing the invoices, you have access to transaction data that might be super useful to lenders to assess the credit worthiness of the businesses, right? So are you guys partnering with anyone on revenue-based financing that you're providing the data and they're using it to score the client?
So, you're 100% right. Because we have the underwriting data, we are ourselves doing underwriting at the first place, right? We are launching Polytrade ID, which is a blockchain identity of these Web2 players, which makes this data accessible to people. Tomorrow, we envision a future where all the lenders can access to this data. Everything is on blockchain, which is super transparent. People cannot manipulate their data. People cannot tamper with their data. And once Polytrade or any institution comes and verifies this data, then the underwriting becomes super easy for any lender globally. So 100% right. I guess that's it. Thank you so much, everyone. There's one question here.
Is there any area of focus for the assets or the underlying assets? Sorry, come again? Any geographical focus or loans?
So since I mentioned we are into trade finance, we are purchasing invoices or receivables from exporters selling to large companies like Walmart. So our geographical focus is largely Asia and Middle East, selling to companies like US, Europe, and Australia. This is our focus, but then again, tokenization is such a vast play. Now we are onboarding a couple of real estate companies from Spain who are digitizing their assets, tokenizing their assets, and selling to investors.
What about the nature of the assets to be tokenized? Are they limited to what you mentioned?
On our platform, we are only tokenizing invoices as of now because it's a POC. We have been doing that for last 10 years. We understand every nitty-gritty of it. But then real estate is definitely another use case of tokenization. We're talking about T-bills. So a couple of companies who are selling T-bills on blockchain, they are tokenizing their assets and selling to larger audience.
As an investor in the token, what do I own? What is the underlying asset that I own? You said these are invoices, but are these put under an SPV? Do I own a share in the company? Do I own a share in a fund? How can I own a share of an invoice? So what's the legal underlying asset of my investment as an investor?
No, very valid point. In fact, I mentioned about the role of custodian coming into play here. So we are talking about third-party custodians. So first understand, when we talk about invoice, it's a financial instrument, right? Any invoice which purchased by us is a financial instrument. It has a due date. It has a payment attached to it, which is coming from large retailer like Walmart, IKEA, P&G kind of companies. The custodian comes into play. The moment you are purchasing this token, relevant portion or the whole invoice is kept with the custodian, who will ensure that on the due date, when you go and claim anything, you have the full right available to you.
Just excuse me, just to push the argument, because I need to get a thorough understanding of this. I cannot own a stake in one invoice. I'm sure that the invoices would be aggregated in one element, in one entity. What is this entity? Will it?
No, we cannot do it that way because we are talking about millions of invoices, right? If each invoice goes into an entity, it becomes a very tricky situation to manage that kind of infrastructure. Okay. So think about a custodian like a bank or a trustee who will hold that invoice on your behalf.
It doesn't matter, excuse me to interrupt, it doesn't matter how I think of it. What does the regulator think of it? From a regulatory perspective, I don't know if the invoice is issued in India, I'm a Chinese investor. If I'm a French investor, the invoice is issued in Brazil. I mean, there are many regulatory institutions that need to give us the okay. And this is where I believe the black box lies, for me at least, as an investor. I wouldn't invest unless I know what I'm investing in and what are the regulations behind it.
In fact, regulatory hurdles comes more into the assets like real estate. For invoices, it's a very simple regulation around the globe. If you go to US, you go to Brazil, you go to India, you go to Singapore. When I'm purchasing receivable or I'm purchasing an invoice from a supplier, I'm actually doing a non-recourse finance. This invoice becomes my asset after that, right? So we don't need any regulations around it. We have taken legal opinions in multiple jurisdictions. Understand the factoring or receivable financing.
I have my final question, just the final one.
Sure.
You said non-recourse. All of the investments are with no recourse. Thus, the risk of default should be totally accounted for by the investor, right?
Yep, 100%.
Okay, thank you.